If you go on crypto Twitter right now, you'll see a lot of talk about the death cross coming in the charts for Bitcoin. Now, that sounds pretty scary, right? I gotta admit, especially since it's supposedly a sign that we're in a bear market. But after looking closer, I gotta say, I'm not worried at all. So in this video, I'll explain why I'm shrugging it off and show you how you can view this indicator for yourself on TradingView. So you can take a look at other death crosses in Bitcoin's history, and perhaps you'll come to the same conclusion as me, that it's just meh. So if this sounds interesting or valuable to you at all, then strap in my friend and let's dive right in. So you gotta admit, the sentiment has been really bad lately, right? Just look at the fear and greed indicator. That's been in extreme fear mode for quite a while now. To be honest, the death cross is just one of many things that people are using to convey that fear. I've seen other people point to the open interest trend, funding rates, Wyckoff distribution, reversal candles. There's just so many other types of bearish indicators, patterns, or metrics. But let's hone in on the death cross here. It's an indicator that appears when the 50-day moving average crosses below the 200-day moving average. In the technical analysis world, the death cross appearing means that we're in a bear market and we should expect more downside. But in the most general sense, it just means that the short-term momentum is slowing down, whether that's for Bitcoin, Ether, or any asset really. It's interesting to look at historical death crosses for both Bitcoin and the stock market, because there are some examples where selling all your coins when the death cross appears turned out to be a super clutch move because it would have helped you avoid some massive crashes. But on the other hand, some of them turned out to be complete duds and false indicators, right? And there was just a minor dip, and the people who sold when those death crosses appeared missed out on massive bull runs afterwards. We're gonna take a closer look at a few of these examples of both accurate signals and false flags when I show you how to check it out for Bitcoin in TradingView. But just to add some more color to this concept of death crosses, I want to read you an excerpt from a Barron's article that I found. Since 1928, the S&P 500 has experienced 12 true death crosses when both moving averages were going down, according to Bespoke Investment Group's George Perks. The index declined 83% of the time in the month following those occurrences, with a median decline of 3.1%. But during the subsequent 6 months, stocks were actually positive 83% of the time, returning a median gain of 9.8%. In fact, death crosses have become more common. Out of the 12 death crosses in the history of the S&P 500, 4 have occurred in this current bull market. The fact that we have not seen a bear market following 4 separate occurrences of a death cross since 2010 is a good example of why death might be a slight exaggeration, Perks said. And folks, that's why we should always take these death crosses with a grain of salt. Some people are just sharing it to get attention, to get more views and clicks, right? But we gotta do our own research and we can't just fall for scare tactics like this. This explanation by Investopedia further explains why we can't just rely on this indicator. And I quote, "All indicators are lagging, and no indicator can truly predict the future." As seen in the example with the Facebook stock above, that's the example they were using, the first death cross produced a false signal, and a trader placing a short at that time would be in some near-term trouble. Despite its apparent predictive power in forecasting prior large bear markets, death crosses also regularly produce false signals. You see, they are lagging indicators. So that means that there's already been a large correction and downwards price action by the time the death cross appears. The time to sell would have been a while ago before it appears, not when it actually shows up. I mean, who really knows, right? It could drop more after the death cross shows up, but the evidence tells me that it's really a crapshoot. Now, let's go to TradingView to take a live look at how you can view these crosses for yourself and see whether or not it would have been a good idea to sell when they appeared in the past. But before that, a quick shout out to our sponsors for this video, Atani. They are an all-in-one crypto trading terminal where you can connect your exchanges via API keys. And then you can trade on them all from one place. It's super easy, convenient, and secure too. I personally use them all the time. And because they utilize API keys, you can place trades even when the exchange websites are down during times of high volatility. That's a super clutch feature, and best of all, they're free to use currently, so go download them and try them out using my link down below. All right, so here we are at tradingview.com. Go in the search bar, type in Bitcoin. I'm going to choose this Bitstamp one because they have a longer history. So here we are right now, and let me remove this indicator, right? This is just the charts, and if you go up top to this FX with its indicators and strategies, click on that. And I already have this favorited, but it's called Golden/Death Cross, right? So just type in Death Cross, and then it's this one by Andre Vascones. And there's a lot of other ones you can use, but this is just one that I want to show you. Okay, so click on this, click out of that. Okay, you see this green line, right? That is the 50-day moving average because it follows the trend more closely. And then the long-term one is this red one, right? This is the 200-day. And you see it about to cross over, right? That is the death cross everyone is talking about. But if we zoom back, we can see using this indicator actual times of golden cross. Golden cross is the opposite direction, right? And that is when it's bullish, right? When we're supposed to buy. And death cross is when we're supposed to sell, because it's bearish and we're in a bear market. So this golden cross would have been a great buy. This death cross would have been a bad sell, right? This happened after the COVID flash crash of March 2020. And then we sold down here and then it rocketed afterwards, right? So that was a bad call. And golden cross right before it was a bad call too, because it had that COVID crash right afterwards. So you're like buying here, selling here. You see why it doesn't work? Now this death cross in October of 2019 was a good one because it actually dropped down afterwards, assuming you got back in. The golden cross in April 2019 was a good one. And let's scroll back a bit more. This death cross in March of 2018 was a good one. Let's scroll back even more. No crosses here. Scrolling back, golden cross. This one was a good one in 2015. This death cross was a bad one in September of 2015, right? Look, you're selling down here. You think it's a bear market, but boom, it rockets and pumps so much. You missed out on like all of this, right? Or at least you missed out until like it was way higher when the golden cross happened. This golden cross would have been a bad buy because it dropped afterwards, right? You see the point, right? It's a complete crapshoot. Some are good, some are bad. That's my conclusion after all. And you can just go to this Bitstamp one because it has more historical data and also put that F of X indicator, right? That's it. Pretty simple. Go look at these death crosses for yourself. Pro tip for you. Instead of just following the influencers who are like, oh, death cross is coming, oh no, they're just baiting for engagement, right? Go find some trusted chart traders and fundamental analysts too, who can give you a wider perspective and potentially the whole picture of Bitcoin's price action. Or even better, go learn TA for yourself and on-chain analysis so you can be self-sufficient and not one of those tofu-handed investors who sells whenever some influencer spreads FUD, like the death cross, for example. Either way, I'm not worried at all. If you're worried though, perhaps trim a bit of your position so you can get your portfolio more aligned with your risk-reward preferences. And definitely go watch my video about the strongest case for why we're still in a bull market right here, and my other one right here. Watch them both and let me know which side is more compelling to you. I'm Kevin from BFB. I'll catch you on the next one, and cheers.